Flying taxis aren't science fiction anymore, they're landing on Wall Street. But is Archer Aviation, ACHR, ready to take your portfolio to new heights, or headed for a crash landing? Today we're diving deep into ACHR, the electric air taxi pioneer that's shaking up the future of transportation. Stick around because we've got price targets, technicals, analyst insights, and some wild social sentiment you don't want to miss. As of market close, ACHR is trading at $4.68, down roughly 18% in the past month, but still up over 100% year over year. That's not just a bounce, it's liftoff. To put that in perspective, in early 2023, ACHR hovered around $2. Now it's nearly doubled, riding investor hype around EVs and urban air mobility. Let's decode the financial cockpit. P/E ratio? Not applicable yet, like most pre-revenue startups, Archer is still in the red. Forward EPS, estimated at 49 cents. So yes, losses are still expected. ROE? Negative, because the company hasn't reached profitability. Debt to equity, 0.23, surprisingly low. Archer's got a relatively clean balance sheet, backed by major players like Stellantis. Current ratio, 4.56. That's strong liquidity, meaning Archer can cover its short-term obligations comfortably. Imagine Archer as a startup with a credit score your grandma would love. Clean, lean, and still chasing revenue. Support is chilling around $4.20, while resistance is a stubborn wall near $5.50. If we break $5.50 on high volume, we might see a sharp climb towards $7, where previous momentum fizzled out last summer. But if we dip under $4.20, brace for turbulence. Let's chart the runway. 20-day SMA, $4.85. We're currently trading below this. 50-day SMA, $5.12. Bearish crossover just occurred. 200-day SMA, $4.33. Still above that, suggesting long-term bullish structure remains barely. If ACHR reclaims the 50-day average with volume, that's a classic bullish reversal pattern in the making. Last quarter, Archer posted a net loss of $116.5 million, but here's the kicker. The company confirmed it's still on track for commercial launch by 2025 with support from the FAA. Cash on hand? Over $500 million, largely due to a big investment from Stellantis. Revenue? Still $0, but that's expected for now. Archer versus Joby Aviation. Joby, it's the EV air war. Joby is further in FAA certification. ACHR has stronger partnerships, Stellantis, United Airlines, and the U.S. Air Force. Think of Joby as the Tesla of air taxis, but Archer? Archer might be the Ford, affordable, practical, and backed by manufacturing giants. Analysts are cautiously optimistic. Barclays, overweight rating, price target of $6. JP Morgan, neutral, PT of $4.75. Morgan Stanley, bullish long-term view, calling ACHR a top pick in UAM, urban air mobility. So, Wall Street isn't yelling, buy, but it's definitely whispering, watch this space. Reddit's Wall Street bets is split. Half think ACHR is the next 10x moonshot, the other half call it a flying WeWork. On X, Twitter, hashtag flying taxis is trending, and Archer's name pops up alongside it, especially after the recent Air Force testing news. Risks? Oh yeah, and they're not just air pockets. No current revenue. FAA approval delays could derail the timeline. High cash burn and future dilutions are on the table. Catalysts? FAA type certification by 2025. Commercial flights with United Airlines starting in New York and LA. Military contracts. The Air Force already awarded ACHR a $142 million agreement. Remember Nikola? Tons of hype, not enough product. But contrast that with Tesla 2013, heavy skepticism, early losses, now it's a giant. Archer's story rhymes with those. The question is, which verse are we in? Here's how we'd play it. Aggressive investors. Buy small positions now, average in on dips, ride the speculative wave. Moderate. Wait for a breakout above $5.50 with volume before entering. Conservative. Watch for FAI progress, revenue updates, only enter once profitability path is clearer. What's your call, Stock Talk family? Is Archer about to redefine urban travel, or is it all just noise in the clouds? Drop your price predictions, risk ratings, or funniest air taxi memes below. Let's light up the comments. Keep your radar locked on the next FAA update and Archer's Q2 earnings this August. One surprise could jolt this stock into a whole new altitude. To sum it up, ACHR is a high-risk, high-reward play in a futuristic space with massive potential. Strong partnerships, clean balance sheet, but no revenue yet. Verdict? Moderate buy for speculative portfolios, especially if you've got the patience and the stomach for a wild ride. This content is for informational purposes only and is not financial advice. Always conduct your own research before making investment decisions. Don't forget to subscribe to Stock Talk Daily for your daily dose of stock market insights.